Is this rally real? This is the question that everybody is asking right now, whether you trade stocks, commodities, or cryptos. And little wonder why. We just scored the best week and the best month since 2022. So with markets seeming to improve, will the biggest stocks in the world continue to move forward? Today we take a look at all of the critical levels, including the dark pool activity that showed up last week that might tell us about Wall Street's next moves. We'll also need to be discussing some other things, and that's got to do with breadth. Do we have a real rally on our hands? And of course, treasuries. Has the low finally been put in to what has become the biggest meme of 2023? Well, welcome back everybody to the special weekend edition of our market show around the world. We'll be covering everything to do with stocks, commodities, and cryptos today. But more importantly, we'll be deep diving into the key levels that we need to be watching. It was a sea of green for the week of performance and another pretty good session on Friday, led by things such as semiconductors and the Magnificent Seven. So did we have the signs of recovery? We spoke about the stats last week, which just came absolutely perfectly true. The last 2 days of October plus the first 2 days of November. Very strong period, the right technicals, and of course the Fed giving us a helping hand. So we've got buy signals coming in so many different indicators. So let's look at both the bullish and bearish case scenarios moving forward. First up, the CBOE NASDAQ 100 volatility index range. We basically use this as a bit of a counter, and we can see that Wednesday last week gave us a volatility index reading that usually comes with buy signals. You can see similar times when we've had these readings, and we tend to have more of a thrust. The more important thing about this is often we go into what we call a short squeeze environment. So are we about to see something like that again? Well, you can see here Walter really broke down some interesting stuff about breadth thrusts. Basically, if we get 5 days of breadth thrusts, it seems to be that there are some statistical advantages that markets have actually found in their short-term low. And it would make sense also to the seasonality that's occurring right now. 75.96 was the read, and it does tend to lead into further bullishness. So why was this? Well, it was a mixture of the Federal Reserve saying, well, we're pausing at this stage, we're still seeing the economic data, and then the economic data coming in softer than expected. The jobs numbers, the non-farm payroll, 150K versus what was meant to be a lot better number. And we also saw unemployment go to 3.9%. What I always go with, though, is the false numbers that we're getting. Take a look at this. We've revised 62,000 jobs down, and we ended up going from 227,000 jobs to 165. Then we see September being revised down 39,000, 336 to 297. I think it was those two numbers combined with what we already know about stimulus that really changed the game. A quick reminder as well that we have got a November competition running. It's as easy as linking in the description down below. And all you've got to do, name, email address, press enter here. We're drawing this in literally less than a couple more days. So make sure to be in it to win it. What about the Russell 2000 after cycling from a 52-week low to an incredible gain? Is this a bullish statistic? Well, the truth is, yes, it is. If we have a look at the last 12 months or the next 12 months moving forward, we tend to actually have a 100% strike rate that this is a market low, or at least a period where the market's starting to stabilize. The results can be different from 1 month to 2 months later, but still pretty impressive stuff. So we keep asking ourselves, have we seen the low in markets? Here's another one that's a great stat. SPX up 5 months, then down 3 months. It's only happened a few times, 4 in total. And in 3 of those, we actually ended up having a very good cyclical bull run. There was one negative one though, and that was of course the bear run, which went from 1939 to 1942. So will we be going into a 2016 or 1975 reading? It's certainly very possible, and a great stat there. Some other things that go on here is, what about last week? Well, it was not only a really positive week, plus 5% on the week, but it was also absent something we like to see when we're talking about breadth, a plus 2% day. We didn't quite get that. We got some plus minus, pretty impressive, but we didn't get a plus 2%, which usually means the market's a little bit weaker, and some of you will be arguing right now, I'm sure on the stream, why have we not got the volume that we usually would want? Well, it turns out that actually a quarter later, while the stats are still positive, 10 to 6, we don't necessarily have that super 80% kind of read that the markets are going super bullish. One of my favorites, bullish percent index, made a new high. Traditionally, this has meant that the low is kind of locked in, and often for traders and investors, we're looking for a buy that dip style scenario, maybe a bit of a turnaround in markets into a rally. So bullish percent index, breadth thrust, quite a lot of positive signs. Fear and greed, it's the same. Fear was massive. And of course, we saw this throughout the fear and greed models here, and we also saw it throughout Q liquidity premiums. They went negative, and effectively this means that puts are everywhere. When we know there are a lot of puts in the system and everyone's negative on the markets, we've already seen this thing play out before during May of 2023, and of course, the bottoms of markets in October of last year. A lot of stats that certainly show you that potentially we may have found that bottom. This was another one that I think was super disturbing. We went and pretty much played the game on all of us psychologically. We went from super positive to less positive to super bearish to ultra bearish. 50% of respondents said that they were bearish last week. And of course, the markets ended up doing the complete sentiment switch. And you can see here that the bull-bear spread went actually underneath negative 20%, which is a huge deal. We also moved to gold now and a squeeze. Similar to what's happened on the market recently, we've got incredible gold results and something that can last upwards of 3 to 6 months later. And this only happened about a month ago. Since this report, gold's actually put in 2K plus over an ounce. So this is a huge deal, and it could be the big beginning of a gold bull run. I've said it a few times that I think gold will reach 3K over the next couple of years, and it's just because it's been so bad for so long. In traditional periods, we've almost gone plus minus, kind of like plus 26 to 30% in similar squeeze environments. And do remember that someone is trapped in massive short positions right now when it comes to gold. We've also seen some big moves in one of the biggest stocks in the world, Apple, getting some nice buy pressure coming into it, even though it had you would argue, maybe not the best earnings result. This level has been defended by the street several times from both a sell positioning and now potentially a buy positioning. And it's another sign that might say, well, the market lows could be in. But here's where it gets interesting for the week ahead. We could be moving into a bit of a sell initially because of where we rallied to. We saw some big trades coming through here, the iShares Dow Jones US ETF, and of course we also got a big one here in the ProShares Ultra Short Qs. So is this some kind of target profiting? I would doubt it. I think this is most likely some form of larger entry coming back into the markets to say, you know what, we rallied pretty well. Time for us to get into some type of leverage contract towards the short. This is a 2x leverage. And usually when we see moves into this, especially dark pool liquidity, it can be short-lived, but more importantly, they usually are going into it for that kind of quicker move. So it's quick moves, fast moves, and get out. And we're looking for that signal soon. Did we get large transactions? Here's another one for the bears out there. We had 57% of all of the transactions on Friday as calls. But take a look at this options volume, 51. That's a huge number compared to the normal 39 we get. 51 million, 43% puts, 57% calls, with unusual volume activity pretty much across the board. We also saw a huge push towards treasuries with 840,000 call volume coming in versus 157, 3x the normal 90-day average. But there's a lot here, so pause this screen and take a look. We also saw the biggest thing here, I think, was the Russell 2000 putting in bull call volume for the first time in ages. I've been ranting about this, and I think all of us have in the comment section, about how the Russell has just been getting put stacked consistently. This is one of the second or third times we've actually seen the Russell getting some love from the call side. When we move over to what's going on with rotation, it was a strong day for gold. It was a strong day for solar, regional banks, and of course home builders. And they put on another strong session, which takes home builders now to almost a few day 13 plus minus percentage move. We get a plus 13% and regional banks go plus 12. These two sectors are so susceptible to problems in the economy. That looks like a pretty good thrust from the bull side. And I'm sorry, bears, that is actually pretty impressive. So it kind of points towards maybe we've put in a bit of a rally here that might get sold off, but the buyers will come back in and show commitment. And the same thing is what we're seeing in the technicals when we move over. Yields drop to a new lower low. this could show us that we actually have just seen a technical beginning of change of trend. And it's not just there, it's also in the 2-year. So that was the 10-year. The 2-year also did this. So it could be showing us that treasuries have actually bottomed. Yes, the real bottom, not the fake bottom that we've often seen in treasuries. Now, from a technical perspective, it was a rally to take these kind of highs, and then we saw a bit of a sell-off. What I'd like to see treasuries do is stabilize around here. But if yields keep dropping off, obviously that's going to be a positive sign for treasuries, and they have become one of the most memed about sectors. You would think that this could never happen to treasuries, but it did, and it happened in 2023. So remember, expect the unexpected, but a very positive sign from that point of view. When we take a look at copper, things are improving. We've got an alert at 3.7. I'd like to see Dr. Copper break above that. Also, watch iron ore. It's another one that's big. We also saw the central banks inject back into the market, which is just typical central bank kind of work. Both the world central banks and the Fed, which is the green line here, getting a little bit of the rally on and showing us again what they're doing. They're basically saying, you know what, not just yet. We're not going to let these markets fall. Dow Jones Transportation Average doing really well, putting in a solid week. And as we mentioned before, home construction and home builders absolutely rallying. And these were moves that, while I think they will be pulled back a little bit against, it's hard to fight something that's so strong. They really like what they see. And this is a positive sign for bulls in these markets. When we go over to the dollar index, that also suffered the fact that yields were dropping off. We saw a bit of a sell-off that ended up taking that significant low, hitting all our alerts and telling us that our suspicions might be correct, that this was the top for the dollar. What do you think in the comments down below, though? We'll do a poll over here on YouTube, and I'm going to ask everybody, what do you think is going to happen to the dollar over the next 6 months? I'm not going to say anything yet, but there's the chart, and certainly seeing some sell pressure, at least for now. Is this a fake fall off with a rally coming? You could make that argument because, of course, we do have demand over here, but this next week will tell us so much about the dollar and also the importance of risk on and risk off in these markets. Gold did well. 1992 needs to breach out past 2010, and if it can do that, I'd say we're getting a new all-time high on gold. Yes, it is totally overbought, but at the same time, it's in a squeeze, so you can't really stop it. Oil fell to the level where I could see buyers come back in, but when we go into smaller time frames, we're not seeing that structure just yet. We keep selling off this exact area here, which is around 83.50. Set an alert above that. If we do end up breaching it, could be a big deal. I'm looking for oil to put in a trap, and we'll be watching it throughout this week. Tesla also did okay. The whole government stuff around the world, making Model 3s quite cheap and attractive, probably will help out Tesla. And there's a whole bunch of other things that are coming through. But this was a positive sign, although it did sell after rallying up throughout the session. But it managed to put in a new higher high. And I think that pullbacks again, if the market's going to find buyers, maybe Tesla has based on that. Apple, right at the top of the trend line, again, could be due for a little sell-off after holding up through the earnings, but it's a very important zone for that one. Let's move over now to indices, the major indices. The Australian market, really happy with that breach past 6,900. I talked about that a lot. Another one right at resistance, and you're going to notice this through stocks and through indices. These are switch points for these markets. So super important areas. The Australian market right on that switch point. The German market doing incredibly well. We zoom out to a daily here, and what we're going to see that it's right in that supply. So again, a very critical level. This is exactly where you'd expect some sellers to come back in. And ideally it would kind of go like this and then maybe like that afterwards. So it could be an opportunity for people this week to look at the smaller time frames. And it does look like things have improved across some of these markets. The US 2000 doing really, really well. Obviously putting in a huge rally, but again, right into resistance. This is exactly that area. We talked about 1810 so many times. We broke through 17, I think it was 10, 1720. We breached straight into this trend line we had drawn. And that's what happened. The market just went, you know what? I'm going to move up. I'm going to move to these critical levels, close the week. And now we get to start a new week of maybe even some selling, which would be probably the best thing actually, whether you're a bull or a bear for this market. It would be nice to see some selling come back into it. I'll be sharing over on our Twitter X account some of the things to do with retail sentiment as we go throughout the week. And I think that could be one of the biggest drivers of success and failure when it comes to understanding these moves a little bit better. Here's the upward trend line for the NASDAQ. It's an absolute critical point. I put this on the thumbnail for a reason. This thing is the trend line that everybody talks about. We take that blue area up here, which is around 15,300. It's going to be super bullish for the market, and of course something we'll be looking for. And because we know the Fed's coming out this week, we're going to get some information about that. As we always do, the S&P 500 is the number one TA that we do, and the reason is because it drives so many markets. We know where the bull runs are, 43.90 plus, absolute key level. We've just closed in at 43.70. This zone is major, 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 and it also was a very strong week. If we go back over to the weekly, it was a huge rally into this area. So will this market be able to breach this zone? Well, first up, if you're a bear, you're going to be wanting to go into smaller timeframes and look for technical switches in this area. My favorite thing for this to do would be to drop first, or maybe bounce up, rally through, take a new high, then drop straight back in and come back down to get a more acceptable level. And that kind of acceptable level would be more like a 4,200 to 4,250. So we'll dial that in later on this week, depending on what happens, and make sure to subscribe for that, because I think it's going to be very interesting to check this market out. So many little confluence levels though around this 43 kind of 60 to 43.80 area. Traps everywhere. Not really the greatest zone to be buying in, even if you're an investor, just purely because it's now moved to that level. If you were going to buy, you had to buy a little bit earlier, or wait for the next high probability kind of zone based on your systems. Okay, let's have a look at this week ahead in terms of what is the biggest news we should be watching. For Australians out there, definitely worthwhile checking out the cash rate and the statement there, 4.35%. If you're not aware, a hike is expected. And then we have Fed Chair Powell discussing things on Wednesday of this week, so that'll be a big one. Of course, everybody's going to be paying a lot of attention to Powell now moving forward again. And then 2 p.m. on Thursday, we've got Fed Chair Powell speaking, and then we have the prelim UOM consumer sentiment. So this week is allowed to be a little bit more technical. Powell will be the biggest runner, and of course we'll need to be paying attention. If we take a look at Bitcoin, it's still in an upward rally. There's really no changing that, and we're still kind of thinking that it could move towards those 40,000 levels before it potentially finds sellers. There's really not much stopping it here on the left-hand side, which I think is a very important factor when it comes to Bitcoin sentiment and take profiting zones. As always, if you enjoyed today's video, make sure to subscribe, give it a thumbs up, and of course, enter the FX Evolution November competition. Just a few more days. We're giving away some excellent prizes. I hope to meet the number 1 and number 2 winners very, very soon. Could be you, who knows? And if I do, I look forward to showing and imparting some of the knowledge that I've garnered over this last 15-year journey. Thanks so much, everybody. We'll see you in the next one. Bye for now.